Hey guys, welcome back to the show. My name is Max Convexity. This is the Daily Covered Caller. I try to do it 2 times a day. The show, sometimes I just do it once a day. But anyway, the market just closed. It's kind of been a wild couple of days in the market, and I didn't have a show yesterday. This is a makeup show for no yesterday show. All right, so let's see what's going on the charts first of all. All right, well, here's the SPX, and the profit boxes are drawn. That yellow box down there, that's not a profit box. That's something else. And that green box, that's something else. But they don't have anything to do with options. All right, so, this morning it looked like we're going to make a full profit. And we opened and we didn't gap down like everyone was afraid. And then we actually went up. But then it turned out to be kind of a dead cat bounce. If you watch my morning show, that's kind of what I was saying. Generally, you can try to pick a spot close to the middle line. If you didn't get short the first time, like yesterday, but you wanted to, sometimes you get a second chance. Well, anyway, who knows how that's going to work out? The market went down and didn't really make a new low. It kind of went down and just petered out. So who knows? Who knows what's going on? That's the good thing about these high yield funds. They just sell options every day. It doesn't matter to go up, they go down, and they make money. They just capture that extrinsic. It doesn't have anything to do with timing the market, really. Now, yeah, other things being equal, it works out better when the market's going up or at least sideways. But it really, in the grand scheme of things, doesn't matter as much as a lot of people think. All right, so same thing here with the NASDAQ, a pretty massive little rally there this morning, and then just met some resistance, sold off, finished right by the bottom of the profit box, probably have a partial profit when we check it out on the spreadsheet. Okay, Russell's, IWMY, same thing. It looked like they were outside of the profit box for a while. They were going to have a loss, but then looks like right at the end of the day, they rallied right back up into the profit box. So now let's see how everyone did as far as trading wise. We'll look at JEPY. JEPY lost $2 million yesterday, but they made $218,000 today. They sold this option for 33 bucks. It's the 55.40 strike. So they need to be over 55.40, or at least within 33 points of it. Well, the market finished at 55.20. All right, so that's 20 points in the money, which is this number right here. Points in the money. So points in the money comes off the original max. The original max, that's how much they're trying to get. That's what the entire premiums were. They get the original, they get the whole amount lots of days. But not all days. They were going for nearly 600,000. They got about a third of it today. So we'll look at triple QY. Oh, one other thing back here on these guys, we have a dividend estimate of $4.10 or $1.37, which is insane. I'm thinking that calculation's wrong. Let me check it real quick. That calculation's got to be wrong, but everything looks right. I don't know. It's only 3 days, so it's probably just an early calculation. Just FYI, though, that dividend's still looking pretty good. Okay, so triple QI, my favorite fund, just because I like NASDAQ. These guys sold options for 130 bucks at the 19.020 strike price. All right, so those are our key numbers. Well, the market closed at 18,921. Damn it. So we sold the 19.020. So what's that? 70 points in the money, or wait, no, 90 points. Anyway, nearly 100 basically. All right, so they were going for $1.3 million, ended up realizing 300,000. That's about the way it looked on the graph. They're down 93 cents a share on the month. Yeah, that looks right. Dividend estimate, though, is $2.91 or 97 cents, which would be great. It'd be 99%. IWMY All right, these guys sold the 2160 strike for 17.5. Well, the market closed at 2145. Remember, they sold the 2160 strike. They need the price to be over 2160, ideally, or at least within 17 points of 2160 to keep from having a loss. Well, luckily, 1745 is about 15 points, right? Away, sure enough, there's that number, 1478. So they were going for $1 million, and they squeaked out 154,000, which is what it looked like on their chart as well. So 3 for 3, these guys, they all barely squeaked one out. Let's look at USOY. USOY. For some reason, I'm thinking maybe I don't have the spreadsheet updated. Let's take a look at the spreadsheet. Okay. Yeah, I'm just kind of manually. Yeah, that'd be a huge. There's no way it's going to pay that much, but that's what the calculation says right now. So right now, these guys have the 72 strike call, or they sell a covered call. It's the same thing as selling a naked put. I know that's kind of confusing, but when you own the stock and then you add a call on top of it, it's the same thing as not having any stock, but just selling a put naked. Because the stock is the money in the bank. To sell the put naked, they make you have the money to buy the stock if you need to. So you do own the stock. You don't really own it, but you do own it. But anyway, they're the same transaction. So for USOY, I'm trying to think if these guys do a put or a call. There's so many of them nowadays. These guys actually just sell a put. So it's the same transaction. But even on the funds that sell a call, it's the same profit loss. It's the same trade. Sell a covered call. They want the price to be at the strike price or above it, whatever they sell. Okay. For some reason, I thought these guys did covered call. Well, these guys sold the 72 strike put. Well, okay. So we need it to be at least, we need the USO to be at least at 72 or at least within $1.51 of 72. Well, here's the closing price is 69.61. So the computer hasn't figured it out yet. I haven't told it to. This one doesn't figure it out live. What is that? 239. That's going to be an ass kicking right there. Now, I don't know that they've closed it, but right now this option that they're trying to make 240,000 on, kind of like yesterday's, they were trying to make 240 on it, ended up losing 385. So then they covered that one, and now they're trying to make 240 on this one, and they're losing 140. So what does that tell us? That tells us the price is probably going straight down, because selling puts or selling a put naked or selling a call plus having the stock, they're both bullish strategies. Neutral to bullish, slightly neutral to bullish. Let's check out USO. Yeah, straight down. And yesterday it was down like 3.9% on the day. Today it looks like it's down a couple percent. So yeah, what I was trying to say, any program you have covered calls or short puts, because they have a long bias, that part of the program is going to be hurting. You know, that's just kind of the way it goes. Now you're making really good income when the market pulls back, because lots of times volatility is increased. So you're getting paid more for the options. And when the market eventually turns around, you should get a good price for those options. But yeah, oil's having a rough time. Oil's down another 2% today. So it's down 5% in 2 days. So I wonder if Bitcoin's pulling back too. When Bitcoin and oil pull back, you know, Bitcoin's up a little bit, but today it was up, but it's kind of just chopping lately. Well, let's see. I noticed this also. It looked like Tesla was one of the few bright spots on the board. We're getting ready to look at the Tesla crash delta neutral report. But yeah, look at Tesla doing a great job, up 4.1%. How much of that do you think Tesla caught? Just 30 bips. Oops. Oh, well. These weekly ones don't always trade one-to-one. The dailies are so easy. The weeklies, they have a harder time. The price is probably lagging. I bet the fund made more. I know the fund made more than that. The price is not giving them credit for what they made. Or I would imagine. I don't know. They're probably capped as shit though. I haven't been watching retiring dividends reports lately. That's probably what it is. All right. Well, oh no, I read it wrong. Tesla was up 2.2 down here. I thought I saw right here. That was an after hours quote that it was just up for. It was just right there. I saw that right there, but that was after hours. Oh my gosh. All right. Well, that's what I would expect. So what do you think TSLP would be up? TSLP is up. I don't want to do the after hours thing again. Well, I don't know if that's 4 hours or after hours. I guess we could look at the let's look at the buffer report. Hopefully it'll have this stuff on it for us. All right, here's the buffer report. CIVB and SFOL getting killed. We're going to look at the volatility report in a second, but before we even look at it, when we see that's happening, I'm guessing volatility closed on the highs for the day and is still going up. I'm just thinking based on this, and if that's the case, it probably means the sell-off isn't over yet. Or it could indicate that. I SPY down as well. Look at that, the best one on the board, JEPY, up 54 bips. I bet that's what it really made. Or well, no, it's not what it really made. Let's look what it really made. It could have really lost. Well, no, it really made it made 26 bips. The market's giving that one too much credit. I just don't think it's giving TSLY enough credit, was all I was saying. I think in reality, it may have made a little bit more than that. But since daily options don't expire every day, it's a little bit more difficult for people that price, like the market makers that price these between expirations to get it right. Where the dailies are just a straight calculation. They make X amount of dollars every day. Okay, so let's see what else we get ourselves in the middle of. All right, so I like this chart, but I hate to see what's happening to CIVB. So this is August and this is September. So and these aren't all the funds. People have asked me to put other funds on there. These are just a cross section of some funds we look at. I'm working on different ways to present the data. I haven't been happy with the way my data or really a lot of stuff's going. So anyway, this is kind of a new idea. I didn't like it at first, but now it's starting to grow on me. So I may kind of stick with that. All right, and here's just for this month, and this is a different way of looking at the same data. This is the funds that I'm studying on this list, and it's how much they were down yesterday. So we'll look at the benchmark as SPX. It was down 2.1 yesterday, but then today it rallied a little bit. It's only down 1.78. Let's hit refresh and make sure it's a fresh quote. And that means it's down 1.78 between the 2 days. So starting from the 30th starting from Friday night, whatever that closing price was, we're going to measure everything off that because that was the last, that was the last day of the month. And that's the same way that we did the last month also. We looked at August, and it was a great month to look at because it was a huge sell-off and then a really fast recovery. So it's fun to watch how these funds didn't blow up or didn't even come close to blowing up. If there's one of them that did come closest, it's ZIVB. So, you know, it's on our watch list. I mean, it's down 6% today when the benchmark's down, or it's in 2 days, it's down 5.9% in a 2-day period when the benchmark's down 1.7, you know, so it's, but then we can see the safer funds are down less than the benchmark. THTA is extremely safe, as we know. JEPY is a safe fund, in my opinion. iSpy's having a rough time. iSpy's actually lost more today. Well, and actually, the Goldman Fund, GPIX, is down today also. Okay, so let's look at the Tesla crash delta neutral pairs trade. So what this trade is, it just assumes that an investor buys and maintains an equal portion of Tesla and Crash. Tesla is a bullish high yield fund based on Tesla. Crash is a bearish high yield fund based on Tesla. Tesla sells covered calls. Crash sells covered puts. It's the inverse transaction. If you own both of them together and just looked at the stock, the NAV prices, the stock prices, unfortunately, that would be down 27%. The NAV would be down 27%. But in the past 3 months, it's been going on this summer. So in the past 3 months, the pair has paid a yield of 20%. All right. So then when you factor in the 20%, you're really down 6% on a total return basis. And today the pair was actually up 0.5%. Great job. Okay. We've already looked at that chart. Okay. So that's what I wanted to show y'all. So let's look back at the market and see if it's moving after hours. Oh, we have earnings also. We can talk about some earnings stocks. And we have some ones that have earnings tonight and tomorrow. So we'll talk about that. And we'll look at the ETF heat map. And we'll also look at the volatility report. Okay, so the heat map, there's basically no green unless it's an inverse situation like volatility, which trades inversely, or bonds, which sometimes do also. So a little bit of red down here. Well, of course, red on USO. A little bit of red on USO. XLE, that's the energy complex. KRE, that's regional banks. KBE. Or wait, KRE, one of those is regional banks and one of those is home builders. And I should know the difference. I'm sorry. All right, my bad. But in any event, that sector of the economy taking it on the chin today on a one-day basis, but everything else looking good. We don't do this often enough. Let's look at a 1 month performance. See what trouble spots we have. Just the inverses on a 1 month. And crude, USO, and other than that, inverses. You know, funds that are designed to go down. We'll look at a 1 week performance and see. Yeah, on a 1 week performance, it's a little dicey. All right. So now let's look over here at some earnings. All right. So we had Zscaler after the close yesterday. That went well. I had some content on a couple of Zscaler trades. They're still open. We'll take a look at them. So today, Wednesday before the open, why is this on the calendar on Tuesday? I don't get. Maybe it's because I clicked into that. Yeah, that's probably all it was. Or I don't know. Anyway, all right. Well, Zscaler sold off. Zscaler was down big. Well, there it is. It was down big. Dick's was before the open. Dick's sold off. Hormel was I think that actually gapped up. Dollar Tree sold off. This one sold off. CRPT, what? Copart. So tomorrow we have Broadcom, IoT, DocuSign. Let's look at something really quick. Slow bonus content for those of you that stuck around this long. Right after this, we'll look at the volatility report, and it's still bearish. The too long don't read is it's still bearish. Didn't give any early warning on this last sell-off, and it's still bearish. So, but we'll keep an eye on it. It can turn in a hurry. These other ones have been, I'm tempted to say, make DocuSign a bearish leaning one. So the way I do earnings trades, I either do, usually typically lots of times do one that has a payoff profile like that last one, or a payoff profile more like this one. But in any event, so all you have to know is which way the stock's going to go. On DocuSign, I don't know. I'm just going to guess down since some of the other stuff's going down. So we'll see how this would have done. But I like the risk reward on these types of trades. It's a 4-leg trade, but the commissions are free. So, I mean, there's hidden costs in there, but still, it's maybe $130 risk, and all you want for DocuSign to make it 2 more days and not to go up more than 11%. If you're bullish on DocuSign, I can do the opposite trade because it doesn't matter. But I'm going to take the opinion. So we're just looking for the price. If it does go up, not to go more than 63. Ideally, we want maybe the price to go up 7%. That'd still be a profit, or down any amount. It can go down 100. It doesn't matter. We don't want to go down 100%, but it doesn't matter. But it could go up, 5, 6, 7, 8%, and still have a profit in the trade. If it goes 6% at expiration, it's still $115 profit in the trade. Anyway, DocuSign, this is actually a pretty good one. Earnings trade. I'll post a link to it. Let's take one look at it and make sure it's tight. 295 and 305. The volume only 94 contracts, but they have 300 open. 157, 175 wide bid-ask spread. So we're selling. I'm just going to give us a bad price here. Hopefully we can get a better price in real life, but just to make sure this is still a viable plan, even in the worst case. So if we only got 157 for that put, because that would be the bid, and we only got 295 instead of 3, that really won't make much difference. But let's just see. That's what I do sometimes to make sure. The risk reward still looks great to me, just eyeballing it. $150 risk. It can't move. If it moves more than 9% against you, you're going to lose. But if it moves, you can see it can go anywhere else and you win. And if it doesn't move at all, it can be a nice size winner, $400, $500, $600, $700. Well, no, it won't be that big. $200 or $300. All right. So, I saved the trades with the new prices. All right. I'll post a link to that. All right, now, so let's go to the volatility report. Okay, so this report I was trying to do last week, the report is based on the volatility index. So the volatility index is VIX. The volatility index is based on option prices. So there's different ways to measure option prices, and there's different indexes. There's something called the VIX, which is just an index. Then there's something called the VIVIX, which is an index of an index. It's the VIX of the VIX. But anyway, that's what the VIX looks like. This is what the VIVIX looks like. And then you also have VIX futures, VX. They're all very similar, but based on what different ones are doing at different times, it gives me different clues to what the market's doing. Over the years, I've modeled market behavior, kind of maximize pain. Maximize. Yeah, I didn't want to maximize it. Restore pain. That's all I want to do. Okay, so all I did is on this bottom one, I put this is the market down here, so you can see where the signals are, and you could see what the market did. But the market, this is the SPY, and the SPY doesn't trade at night, so it's a little bit hard to tell. I'm thinking about, I think it might be better to switch this to the S&P 500 because it trades 24 hours. It's the same thing as the SPY. But when it does that, it messes up my chart because my chart goes with the other one, right? I didn't think about that. I thought it would stay. So if I type SPY back in, okay, well, that's fine for now. You can, well, it's fine. Sometimes I run the market in the top pane also, but here's, okay, so here's, right now we're on the bars right here are that the bars have been red ever since back here when the SPY was at 552 on June 17th. Okay. And then sure enough, boom, we sold off big. But this, in this time frame, the volatility and what I'm looking at is still bearish, and it's remained bearish, even though it kind of went up and almost made a new high. But now, you know, it looks like it failed and now it's going the other way. So that shouldn't surprise. But the shorter time frame is the 30-minute time frame, and it's signified by these red bars and this green bar. So they're sells and buys in the shorter one. So when you get a red bar in the 30 and the shorter one, like you did here, everything's lining up. And sure enough, you got that on Thursday when it sold off, then Friday, and then, you know, Monday. So sure enough, but the shorter term signals are faster. So, but you also get a faster buy signal. The shorter in the daily time frame that hasn't even signaled a buy signal yet, shorter term signal to buy signal, and it wouldn't have been a bad place to play for a counter trend rally, because sure enough, there was a nice rally there. But then just like anything, it's just, or just like any technical system, it's not magic, and it's backwards looking and whatever else. So it gives a false signal here, or actually it turned out to be the real signal, but it gave a false signal there, even though it did sell off the next day. Then it rallied, and then it gave a buy signal, but that was a false. That was definitely a false signal. Then it gave a sell signal a few days ago when the market was at 558, you know, but then it rallied the next day to 564. It sure would have been nice if they would have given the signal the next day at 564, you know, but it doesn't think about stuff like that. It's just looking at, it's just looking at risk on and risk off. It's looking at volatility, and it's looking at pros versus shows. And it's a ratio that I made and something I follow. But anyway, so right now though, it's double negative, right? Because the longer term's bearish, and so's that, you know, so until we see the shorter term at least turn green, you know, it looks like lower prices ahead. Now, this thing can't predict the future. Tomorrow, the Fed could do a surprise interest rate cut, and the market could be up 4%. A technical indicator has no way of knowing that. So I'm not trying to predict it. I'm just saying, based on what this is saying, it looks like lower prices ahead. So anyway, hopefully everyone has a pretty good handle on it now. I'll start giving the update quicker. now, but it's double negative. And we could put the real prices up here. Watch this, make it easier to look at. Okay, so we'll kind of zoom in. We'll zoom this one down, and we can see in the shorter time frames. Right here, this buy right here in the shorter time frame was really a good call. Okay, because it saw what it saw is it saw people, especially professionals, taking hedges off, meaning clear sailing ahead. But then right up here where it turns red again, it saw them putting hedges back on. And actually that was a good signal. It should have just stayed red the whole time and never flashed green again. Because it eventually did end up selling off. And I believe red was the right way the whole time. I think that this green was a wrong signal, but you know, you never know. Like I say, this thing, it's not smart. It just is saying risk on, risk off. And it could just tell me in either the daily time frame or the 30-minute time frame. All right. So, but you could see up here, this last risk off call, it was actually right at the bottom. It was a terrible, because it looked like it was going to crash then. The market was at like 559. The market rallied straight the next day to 564, you know, and 55.60, but you eventually did get your payoff. 55.61, because here we are 50 handles lower right now. Like I say, and I just have a feeling this we continue lower. I think that surely we'll try to get, surely we'll fill this gap, if not go for this open gap down here. Let's turn it on SPY so we're more familiar with the prices. Yeah, so the SPY, I'm looking for 546 to 545. And then if it gets under that, God forbid, but it is that time of year when it's a real scary time of year. So it wouldn't really surprise me if it gets under that. So that's why I'm putting these targets here. I'm not trying to predict it, but if it gets under this one, we're aiming for this one, I think. That's the next logical area. So we'll see. We shall see. All right. So I think we've covered it all tonight. We'll see how this volatility report works out for us. This time up here when it did it, and when it got double bearish right here, it worked out really nice. We'll see if that happens again. It didn't happen right here, but we'll see if it happens right here. All right, guys. I appreciate y'all for being here. Go watch my video with Cy from Tap Alpha. Oh my gosh, I misspelled his name. His name's spelled S-I, and I misspelled it S-Y on everywhere on all my promotional stuff. I misspelled it 10 times. Oh my gosh, so embarrassing. But I fixed it. Everything's fixed. New thumbnails, new everything. He's a great guy. He wasn't upset about it or anything. I was upset about it. It upset me because it's embarrassing. All right, guys. I appreciate y'all for being here. You have a good day.